kind of technical analysis indicator I use are going to be price levels. So price levels, and Thinkorswim is going to be this tool right here.
Mm-hmm.
So basically, I'll look for the wicks. Um, I'll start at the tops. So this one way up here, and oh, I'm on the daily. Let me start at the weekly. I'll start the largest time frame, and I'll look for the tops. So this is like the resistance. Come on, there we go. There.
So right now you're looking for tops, right?
Yep, looking for tops. This is on a weekly chart, and I really only need it to hit like one time on a weekly chart, but it is hitting more than once at these peaks. So these are good
Oh,
areas.
it's hitting it itself.
You see, like when I look left and I look right, you see this peak, this wick
Uh-huh.
hits it, this
Okay.
one hits it, and then this one also hits it.
Uh-huh. Uh-huh.
Right. So I'm looking for either the wick to hit it, the price level, the body of the candle, either where it opens or closes.
Either or.
Yeah, either or.
As long as it's touching something else, obviously.
Yeah.
Okay.
So you'll see a lot of wicks come up, touch it, and then the body of the candles might open or close on that level, left and right. And you really don't need to do the whole chart. You just need to do where price is at. So let's get more like a smaller time frame. Daily here, right there. Oh, there. Yeah, price is way up here. Let me do the 1 hour. Okay, now we got a better view of pre-market levels up here. So do it right there. Here was a level, rejected right there, probably right here, here, there, there, there. There's a lot of chop in here. I think like here.
And this tool is called what?
This is a price level. So we looking at different possible resistance areas, support, resistance. And it's going to be a lot of lines on your chart, but it's worth it when you're day trading to have them on because now, so you kind of get a better map, an idea of where price can kind of bounce off of,
Mm-hmm.
right? Um, let's look at another example I already did. We'll look at Tesla, for example. Uh, good example. So price kind of pushes up in the morning, but then sells off, and then you see it bounce off this price level, and then
And
start
you
to
had
go
that
up.
price level before.
Yeah, and you had that price level before on your chart.
Wow.
So,
And
um,
where did you from what
so I'll start
uh
at the weekly. I'll do,
so you would start at weekly. Okay.
yeah. You see, I got like tons of time, or sorry, price levels at different time, frames. So 4 hour. So I could do probably like down here as well. So it's like previous areas of resistance and support where the candles closed or peaked, and it gives you these.
So initially you want to do it to as many as you can, just in case it actually
Not as many as you can. You
hits
want to
the
look for
level.
the strongest key levels. I have a lot personally,
Mm-hmm.
but you want to look for where it touches the most, left to right. Those are going to be the strongest levels. But the more you place, the better idea you have of potential reversal zones, right?
100%. Yeah. Okay.
And so you get in here because you see it bounce off this price level, and then you ride it up, ride it up, ride it up, and then you see right here, you see this wick. Sellers reject, the price rejects this price level.
Mm-hmm.
Pretty spot on, right? It hits that and then bounces right down. So that could have been like
Wow.
your sell signal. So price levels alone are pretty strong. Technical analysis indicators for finding, good entries, good sell exit points, right?
Hmm.
And the re-entry right here, boom, bounced off, and it gives you like these channels, right? These different
Yeah,
channels that it
it gives you
goes
a
through.
yeah. Okay,
Cool.
I
So those are
understand that one.
price levels. So you want to go from weekly to daily to 4 hour and then 1 hour. And then I recommend getting Thinkorswim. When you download it, the default price level is going to be different. All you do is you right click on one of them and then you change it to a dotted line. And I think the default color is red, but you want to change it to white because it just looks easier on the chart. And then hit OK. That's how you save that. So the next technical analysis tool I use are estimated moving averages, EMAs, right?
Hmm.
So a lot of people use the 9, the 21, and the 55. So we look for,
And can you explain estimated moving averages again?
yeah,
I
EMAs.
missed.
They're going to be, so the number explains how many uh, bars or candles are in the EMA's calculation, and then it smooths out the price into this line. And so 9 bars, 21 bars, 55 bars. The larger
Okay,
the larger
okay.
amount of bars, the EMA is, the slower it's going to react to the price. So that's why the 9, this orange one, is following the price the closest, right, and reacts to the
Hmm.
price faster because there's less candles in it. So let me put in some eye drops. My eyes are
You good, bro?
dry.
Take your time. How many of these do you do a day?
Usually like 2.
2.
Yeah, it's the
Not
only one I
bad.
did today. Did 3 yesterday.
Yeah, Sunday's probably a busy day for you.
Yeah, especially getting ready to move.
Where you moving to? What part of Cali?
Highland Park, LA,
You're in New York now?
Michigan.
Michigan.
Yep.
You used to live in Cali though, right?
2 years.
Yeah, Cali's nice.
Heck yeah.
It's different. The people there are fucking different though.
I know. Where are you from?
New York,
New York.
Queens.
Cool.
There's a couple people on the video call that are from Queens too, but
Yeah.
I'm not usually on it because I do things during the day. But
Oh,
now
I
I'm getting
gotcha.
more into trading.
I see. So let's see. This would be a good breakout right here. Tesla. Ooh, we see prices consolidated right here, right? So all these EMAs are kind of, squeezing and they're touching
Staying
each
still,
other,
yeah.
right? So
Hmm.
EMAs always, 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 when they're spread out, they pull back to each other. So they'll always consolidate and pull back to one another, right? So we can see here they're consolidated. Now we get the crossover, right? The breakout. This is the 9, and this the blue one's the 21. The 9 crosses above the 21 right here, and
Hmm.
this is your buy signal. So the 9 crossing above the 21 is going to be your buy signal, and so you can play EMAs 2 different ways. You can play the breakout, which I just explained, or you can play the pullback strategy. So remember I said EMAs always, always, always pull back. So look for where the EMAs are the most stretched out, or kind of when the bar of the candle, the price is the most spread out from the 9 EMA, like when it has a nice move up, because that's when you're going to start to come into some resistance and the EMA is going to start to consolidate. So you can
Hmm.
see the difference between right here, how spread out the EMAs are versus over here, where they're all basically touching one another.
Hmm.
So the breakout happens, they fan out, and then they start to pull back to one another right here. And you can see right here, you have a price level that it fails to break over. You see wick, wick, wick. So this is all sellers stepping wick, 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 wick back down.
Yeah.
Right? So you could have taken your sell signal and gotten out of your call after the breakout, wrote it up. See it's hitting resistance here, and then now it's making a lower high. Probably start to get out, right? Because the EMAs are fanned out really big, and they're going to start to now kind of consolidate, right? So what will happen um, when the price breaks out is it'll pull back to the 9 EMA, it'll pull back to the 21, and then the 55. So you can see right here, pushes up, bounces off the 9, comes back up, and then now we hit the price level rejection, we just break right through the 9, and then we try and test the 21. We hold above the 9, then back on the 10 or 21, I mean, and then it bounces down, and then it tests the 55 right here.
Wow.
So you could place like an order at the 55 EMA. This is actually like a price level too, you see.
Mhm.
So the price level and the EMA match up with one another, and that could be like a target entry zone for a pullback, right?
Yeah.
This is still an uptrend, or it started to go down, but at least for the rest of the day, it was mostly an uptrend. You could have potentially got in the bounce right here for a scalp or a day trade.
Mhm.
So now when the when the EMAs are on the bottom, or the large EMA, I mean the 55, uh, that's an uptrend, right? So the 9 and the 21 are, pointing up, and they're above 55. This is going to be an uptrend bullish. So now the downtrend version is going to be like this, where the 55 EMA is on top, okay,
Mhm.
and then the 9 and the 21 are below the 55, pointing down. So this is the bearish trend. So a lot of traders talk about the 200 moving average. They talk about it like on the daily, the 4 hour, and it's a good EMA to kind of buy at, right, on a larger time frame, because it's good point to invest in. But what I noticed is like the 200 moving average has significance on a smaller time frame, and I have the 100, 200, and the 300 on my chart. And the
Mhm.
reason I have the 300 on there, no one ever told me to use the 300, but I like the EMA strategy, so I thought one day, why don't I try it out? So I added it to my chart, and I actually ended up taking a Tesla swing one day. Here's the play. Oops. All right, right here. So Tesla had like a big move for extended period of time, and then I had a pullback this day, and then right before the close, we see right here. This is the 300 moving average. This is the 15-minute chart. So it bounced off this 300 moving average right here, and the price of the bodies closed above it. It wicked down, and it actually bounced off this price level. See?
Mhm. Wow.
So right, tapped that
Beautiful.
price
Okay.
level, bounced right up, and then bounced off of this 300 moving average. So both of those signals gave me enough confirmation that I needed to take a Tesla swing, and I did, and it ended up being profitable. So
Mhm.
also you can see right here, the EMAs are really stretched out, right?
Yeah.
So pullback strategy, you can uh, realize that maybe this sellish or seller bearish momentum, um, the EMAs are stretched out, and we bounce off the 300 moving average, bounce off this price level. Yeah, probably gonna start to consolidate back to the upside. So buyers are gonna step in.
Mhm.
So definitely add all these EMAs on your chart. Most people just use the 9 and the 21, 55, and the 200. But I would add the 100 and the 300, because you'll see that on smaller time frames, price reacts to it. Let's look at the 5-minute chart. Plus, I mean, just looking at the chart in general, let me switch between. This is the 9, 21, 55. So you can already see that it's not, you know, it's kind of gives you a less of the picture, right?
Yeah.
So when you put all of these on, it kind of gives you a better idea, right? Like right here, you can see it bounced up 300 moving average.
Mhm.
Here, a dip below, that was probably like the 400, now that I think about
400
it.
moving average. Wow. Yeah.
And then right here, bounced up, came right above it, the 200, I mean, and then tapped 300, boom, down. Yeah, so
Mhm.
you can see how it kind of gives you this wave
Pretty accurate.
pattern,
Yeah.
you know, and so the larger EMAs will have a lot of significance on a smaller time frame, because they'll be resistance areas, but also targets, you know.
Mhm.
Cool. So those are EMAs. Recommend those. So just EMAs and price levels, as I showed you with the
Just together, yeah,
Tesla
they're
right
pretty
here,
accurate.
together they're pretty solid, right?
Uh-huh.
So
Yeah, right there.
so let's say we're day trading right here. This is a good setup. So the 9 this is on the 15-minute. So normally, one strategy is the 9 riding the 9 on the 5. So
Riding the 9 on the 5.
yep, that's what we call it. So you get in, let's say right here, you get a nice entry, or probably like right here. You wait for the confirm breakout. 9 cross above the 21. So you get in right here. So we see price, it rises up, and then it kind of pulls back to this 9, pulls back to this 9 right here. This isn't really a good example of what I would want to show you, because some stocks they'll ride the 9 EMA on the 5-minute all day, and that's like the perfect day trade
Hmm.
almost. Let's see what's been going up recently. Hmm.
You're just looking for something that's been going up.
Yeah. Oh, sundial was good today. Yeah. Here we go. Oh, this is a 3-minute.
Wow, yeah, it's hitting the 9 every single time.
So you get in, you know, you're riding it up, and then see it wicks down and it kind of touches the 21, right? But the price
You're just testing it though.
is just testing it, and it keeps closing above, right? The body of the candle keeps kind of closing above the 9 or right on it. That's
Uh-huh.
good. Now, right when you see this is when it starts to, you know, kind of look for, um, or just be
For the
cautious,
21.
right? It kept going up, and then reclaimed the 9, right here,
Hmm.
and then bounced up, and then you see right here is what I talking about when it closes like, below the 9. It actually closed below the 21 too and had a big strong pullback. So right here is where you probably would have exit, right?
Hmm.
If not right here, um, right here, because uh, it
Because
this
you see, yeah, the
because you can
the
see it basically breaks down below the 21 right here,
mhm.
and we want to
The
ride
yellow
it.
one is 100, right?
The yellow one's 55,
55.
and
Okay.
then this one's 100.
Okay.
Hmm. So yeah, a good breakout strategy is, to look for a stock that has a lot of volume, and then we call that riding the 9 on the 5, and it seems to be pretty profitable. And then once it breaks down below the 21, you can see it'll start to consolidate, and then it'll probably pull back to the 55 as well.
Hmm.
And
And
then
then that breakout after that 55.
yeah,
That's
yep,
that's something you wouldn't even be able to see, right? Basically.
yeah, you could, re-enter right here on the pullback to the 55, right?
Yeah, but what would looking at EMAs, what would make you think that at that once it hit that 55 EMA, that it would actually rebound back?
I'd be looking for volume.
Just volume. That
Yeah,
was probably volume, right?
yeah.
Just a volume spike. Okay.
Um, let's see. So let's go back to that one example. Yeah, right here. I like this one. So you take the crossover breakout, 9 crosses above the 21, and breaks out, breaks out. So now you see right here, the EMAs are stretched out again, like I talked about. So they're probably going to start to consolidate. They're really consolidated right
Mhm.
here, break out. They're really fanned out, so they're going to pull back together. You can see right here, we get a nice rejection of this price level, sell off, and this is so that's two indicators right there. EMA is fanned out, pullback strategy, right?
Mhm.
Wick, sellers stepping in at this price level. Now, this is your third indicator. That's volume. You see it decreasing.
Mhm.
So this decreasing volume. That's how you know the move is, losing steam. So you want to pay
Wow.
attention to volume, right? So that's your third indicator, right? So just using, two basic. I mean, the only indicator really that you're using is
EMAs.
EMAs, right? Price level is just like a chart tool. Same with this trend line for volume.
Where's the EMA indicator on Thinkorswim?
You go to studies right
Uh
here,
huh.
add study, moving averages, moving average exponential.
Okay.
So you'll hit it and it'll give you 9 by default. You do that 3 times, moving average, exponential. Click it, you do it 3 times, and then they'll all be overlapping. You'll hit right click, edit study, and then you'll change
I'm sorry. Can you do that again?
studies, add study,
Yeah, this where I saw moving
averages,
average.
exponential. You click it, it overlaps the 9 by default. So then you go in and you change the number and the color. Then you hit
Mhm.
OK. So you do that. Hold on, let me remove this one. So add 9, 21, 55, 100, 200, and 300.